Folks, if you haven't heard already, One Rental at a Time, myself was lucky enough to have an interview with Ken McElroy and his wife, Danielle. It did post on his YouTube channel earlier in the week. He posted a 8-minute, 9-minute summary of it. The conversation was over an hour, and he has put it on his Spotify account. But the reason I want to have this conversation with Mr. Jonathan Twomley is I think Ken McElroy and I talked about a lot of meaty stuff. We talked about how the commercial pain that is coming mirrored the residential pain, which was a lot of fun. We also talked about good operators, which I think you have to put Ken McElroy in the operator camp. That's where he cut his teeth in property management. They're going to get a lot of tremendous opportunity from folks that need to switch out operators. And yeah, it was just a fun conversation. And I think both Jonathan and I have read Ken's books over the years. So Jonathan, it was a lot of fun, man. It was one of my top 5 guests I always wanted to be on was his. So I got one checked off.
That's awesome. It's funny when I first got into the business, and I did everything backwards, right? I mean, everybody else that I know, like they read a whole bunch of books before they got into the business. Like I got into the business and I was like, I better read some books about this, right? So his one of his books was probably the first book I bought on housing, sort of investing in real estate, and it was good. And I remember him. I was just saying to you offline that I really should go back and read that book again, because it was a great book, and just very like professionally presented. It wasn't hypey. It wasn't like a lot of the other stuff.
Not get rich quick. It was
it was, and it wasn't a book that was written for like, oh, I'm going to give you a little bit of information, but come sign up, and I'll drip out the rest if you pay me $15,000. It was really written to be like, this is a guide to how you do it, and this is all. And one of the things I remember him talking about was like buying, avoiding these low cap rate markets and going and buying like, 15 caps in the Midwest.
Yeah.
And obviously can't do that anymore, but it's still a great idea. Like
it's still prudent advice. Yeah.
Advice. Don't run after the same stuff as everybody else, right? Go where the investor demand is lower, where there's less competition and the cap rates are higher. You make more money that way, and I thought that was great advice. So I'm actually going to, when I get back to my office, I'm not in my office today, but when I get back there, I'm going to pull it off my shelf and I'm going to thumb through that book again.
Yeah. The thing I remember about Ken McElroy's story is it kind of mirrors Sam Zell's story. If you know, the rest in peace, Sam Zell. But Sam Zell became a billionaire because of obviously commercial real estate, but he got his start in student housing. And the reason I think this is important is there's a lot of opportunity to get in the game. Maybe you can be like Ken and Sam, where you are on-site management for someone. And again, Ken and Sam built these huge portfolios, but they were operators first, right? Can you imagine being a on-site manager for student housing? You would get really good at tenant communications, repairs, follow-ups, just that thing. What I think we lost the last couple of years because it was easy money and all these social media types saying, give me money, give me money, give me, is we became financial engineers who lived in a spreadsheet. They didn't even walk the properties. Yeah. If you're buying properties off a spreadsheet and you're not walking the properties, shame on you. So that was one of the things that I took away from Ken and Sam was there's nothing better than maybe starting in student housing. So maybe you're in college, maybe you're in your early 20s and, we're in a really tough time and you can't buy an apartment building, but you know what? Go cut your teeth and be an on-site manager. Others have done it.
Hey, listen, here's another thing, right? And maybe this applies to like a fairly limited, number of people who can take advantage of something like this. But let's just say, let's take this down to the level of someone who's, circumstances aren't maybe as great as someone who's going to college. Let's say you live in a mobile home park, right? You live in a small mobile home park, right? And that mobile home park is for sale, right? Well, it's extremely hard to finance these things right now. Mm-hmm. But you could go to the mobile home park operator and offer them a seller financing deal, right? And maybe even, 90 or 100% seller financing deal, right? And you're into this for almost no money or very little money, and you operate that thing Or maybe maybe there's a deal you can work out with that guy too, where you're going to operate it for him for a couple of years and then do a seller financing deal or
Yeah, do a
whatever.
lease option or something. Yeah.
Yeah, I think there's opportunity there for someone who's entrepreneurial, right? To go and like, really change their circumstances by taking on something like that. And the opportunity for seller financing right now is about as good as it's been
Oh,
for maybe
so
the
awesome.
last the
I hope
last
people heard that.
yeah.
Yeah.
I mean,
Yeah.
it is the opportunity now for people, so everybody out there thinks like, well, there's no deals out there, but it's not true. There are people who are who want to sell for whatever reason. They want to retire.
They're
They're
just
tired of
done.
doing
They're
it. They're
just
just
done.
done. Whatever. There's a million reasons they want to go do something else with their lives, whatever it is, right?
Mhm.
Those people still want to sell. They're not looking at the world going, oh, the financial markets are terrible, so I'm going to wait for 2 more years. Like they want out.
No,
And
they're done.
for those people, really the only way to get out of this deal is with seller financing. And you can go to them and say to them, hey, look, I will offer you the full price that you want for this thing, but you've got to give me this interest rate so it makes sense, right? And this term. And
Yeah.
you can work out a deal that works for both of you. And
Yeah.
they can have their exit, they can move on to greener pastures, they get an income stream. Frankly, it's like
Yeah.
retirement. You're telling them,
Yeah.
like, whatever the deal is, like, hey, it's gonna be $50,000 a year coming to you every year and like now they've got an income they don't have to work for, right? It's a great deal.
Exactly.
And it's a great deal for
Exactly.
you to get into this, right? So
Yeah, I've been highlighting that the last 6 months or so. Again, what we're seeing now, and at least in the residential market, is there's some sellers, they have witch pricing. Um, some of them are just going to take it off, right? Because they missed the market. They don't have to sell. But again, I always give my playbook. Maybe I shouldn't, but I do. I'm saying I'm only looking at deals 30 days on market or longer. And then I'm fishing for motivated sellers. And to be clear, I sometimes will pay list price to get a seller financing deal that allows me to have a better return, because
yeah.
you can pay higher price but get better terms and get a much 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 better deal. So you're right. I think seller financing, the next 18 to 24 months, if we keep rates up at this high, time to get some seller finance opportunities going, no doubt.
And listen, you can do this on Crexy and LoopNet too, right? Or you can do the same thing. You can look at deals that have been sitting on the market, right? And believe me, I look at Crexy and LoopNet almost every day, and there are deals there that have been on there for years, right?
Mm-hmm.
Years. Mobile home parks, office buildings, what have you, like small assets, been on there forever, right? Now, maybe some of those people are just holding out for their price, but they
Yeah,
don't realize
maybe.
they've poisoned the market, right? I mean, they
Right.
have really poisoned their own market by leaving those deals up there. But some of them are leaving them up there because they just really want to sell. And like, you know, and lots of people will look at that and say, oh, it must be a bad deal, right? You should look at it and say, there's a good deal in here if I can get this on the
Yeah,
right
if I
term.
could shape it this
Yeah.
way. Folks, again, there's a lot of pain coming, but where there is great pain, there is great opportunity. You just need to tweak your mindset. Um, yeah. Jonathan, where can people find you?
Yeah. Well, please come to my Facebook group, Apartment Investors Club. Tell me you're from ORAT, and that always makes me happy. You can also get my free download at apartmentinvestorsclub.com. And the last place to come is Two Bridges Asset Management. Google that. That's the easiest way to find us. We have an active deal right now with a very small amount of space it's a hotel I'm very excited about. So if you would like to invest and you are accredited, please fill out the form and just make a note that you're interested in the hotel, and we'll be in touch.
Thank you, buddy. I appreciate you.